Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. Today, we're going to cover the first NFP drop we've gotten in several months. These are going to be September's numbers. A lot going on here. I think that we're the only ones that don't know the number. I think everybody in the know already knows the number. So we're going to break that down for you, what we're expecting today. Honestly, nobody knows on our end, the retail end. Nobody knows what this number is going to be. Nobody knows what it's going to do to the market. But the insiders, I got a pretty good feeling they already all know. So the question is, why even look at September's numbers? We still have to look at October's numbers. Why not just skip to October and forget September? Well, the government has a funny way of doing things. And today we're going to see exactly what that way is. So I want to welcome everybody back to the room. A lot of familiar faces, a lot of new names out there. Great stream yesterday. Thanks for joining me for the FOMC minutes release. A lot of you joined. A lot of you had some great questions. And we looked at some markets and traded a little bit of gold futures. Caught a nice move there towards the end. Today we're going to trade the 920 EMA crossover on very short time frames on the Nasdaq and also the spot gold market, but I want to get started out with Nvidia. We got a lot to cover here, guys, so let's go ahead and dive into it. Nvidia stock is gapped up after a big-time earnings release. Yesterday, it really was nothing short of miraculous, the way that this company keeps beating expectations. You can see that you saw the reported came in at $1.30 a share. We were expecting $1.25 on your EPS, your earnings per share, a major top-side beat. We don't know how long NVIDIA can keep beating these really lofty expectations, but I can tell you that that's a big one right there. That was a big number, and you've seen the pop. Now, we were looking sort of to the downside. We had really some beautiful downside support we put out in the Switch Markets newsletter, right around 165-ish, somewhere down in there, and I was really looking for that maybe a negative number, plus our interest rate expectations have shifted, and we were definitely looking for a retracement and a possible bid. Didn't get it. Now you gapped up. You're up around 196. If you are trading NVIDIA, and I know several of you are, if you take a look at this chart, a lot of you are smart money concept traders. You love the SMC stuff. That's great. Whatever your approach, be aware of those highs up around 200 and 210. Right now, we're seeing consolidation right in front of 200. Today, 200 will be the hot number for NVIDIA. Stay tuned. Stay in the pocket. When the cash open comes in about an hour, you're going to see big-time action in shares of NVIDIA. So I wanted to start off with that because I got a lot of questions about NVIDIA. It was the pick to click yesterday. Seemed like the entire world was trading it. I was checking it out on X. I was looking at a few other message boards, and I go, wow, you guys are all trading NVIDIA. People love to run towards volatility and chaos. We're going to have some here in about T-minus 8 minutes. So everybody buckle up and stay tuned. We're going to run through this and see exactly what's going on. So I want to give a big shout out to some of the folks in the room. Bruce Gordon, I'm doing very well. Thank you, Bruce. Tina Jin, good to see you. Tina, yes, how's Google doing? Well, we'll look at Google probably after the number. Let's see. Working from home to watch your live streaming. It snowed here. Wow, snow's on the ground. I'm rocking the hoodie today. We're going black hoodie because it is cold here in Montana. Looks like we're going to get a big snowstorm for the weekend, and we'll talk more about the weekend on tomorrow's live stream. Be sure to join us. Hey, bro, what's my take on silver? Well, Kuna, I'm going to go ahead and look at silver. We're looking at silver and Google. I think that there's a lot going on here. Buy gold, says Ari. All right, buy gold. Eyes hazy. Hello, good to see you. Over in the How to Trade community, all right, a lot of old faces here. A lot of folks that have been trading with me for a long time. Bluefin, good to see you. Bluefin, Lita, always a pleasure, Lita. Tuku, all right, Tuku's in the house. All right, let's go ahead and get after it. Brian, gold has been so tough these past days. It's absolutely ugly. Eyes hazy, the XAUUSD doing the wicked swing dances. I think that it's been ridiculous. Gold trading, we caught a nice gold trade. If you want to see a textbook Fibonacci intraday trade, check out the FOMC minutes stream from yesterday. Towards the end of the stream, we throw one down on gold futures. Caught a really nice bearish move for a few bucks. But I will tell you this, gold is very compressed. Gold is sort of a nightmare right now. So be ready for anything. I'm ready for a breakout. The VIX is right around 20 right now. All right, let's get right out to price action here. We already looked at NVIDIA. Without further ado, let's get to gold. All right, gold. For me, it's very simple. 4,000 is the 10,000-pound elephant in the room. That's the number. That's the number everybody's looking at. There's no question about it. You can see this week's low. What's this week's low? 39.98. Went to 4,000, rejected, bidder stepped in. So we've got a huge Fibonacci level down there at 39.75. Very, very, very tight week. You hear the complaints in the live chat about, gold's been tough, gold's been tough. Yeah, look at your weekly range. You haven't done anything. You're trading inside of last week. We are waiting for something to happen, and that's going to happen in about 6 minutes. So we're watching closely this NFP stuff. We're going to recap that in a minute, but I wanted to hit that key level. 4,000's key. We're going to be looking at our 920 EMA crossover on very short time frames for gold We're going to use RSI confirmation. I'll walk you through those as we take them. We're also going to be looking at the E-mini Nasdaq. E-mini Nasdaq is an interesting type of environment. It's always fast and furious. We're going to trade some of that live as well. The 920 is very simple. 9 crosses under the 20, we sell. We have this coded setup. Purple bar tells us to sell, and then when it crosses back over, we're looking to buy on a 1-minute chart. You better have some confirmation today. We're going to use the relative strength index, and pretty much every day we use that. We're going to use that as our short-term time frame trade. We do that because it's fast and we can actually execute some trades. I like to execute as many trades as I can live for you guys just because it's important that everybody sees exactly what trading is. A lot of you are brand new to the markets, and if you are, head on over to Switch. Black Friday sale. If you're a new customer, they got a heck of a promo coming out. It's going to be dropping probably in the next several days. Check out switchmarkets.com. They're going to get you up and running with the Black Friday promos. Steve Francis, good to see you, Steve. Welcome. All right, NFP today, Thursday, 11th of November. There's no reason to have it today other than the federal government said we're having NFP today. And I say, okay, great, let's go ahead and have it. What is it? It's just a jobs number. It's a jobs count. It's a count of the folks that are going to work. Andrea Garwal, good to see you, Andrea. NFP counts the number of workers in the U.S. Leave the rest of it alone. You don't need to know any more than that. What is NFP with regards to the markets? It's what we're going to do is look at projections and the previous release. All right, if we're above these things, it's going to mean something. If we're below these things, it's going to mean something. Relative analysis is absolutely key when we're looking at an NFP number. What does it mean for the Forex? If it's above expectations, it means it's bullish for the USD. If it's below expectations, it means it's bearish. What does that mean for your other asset classes? Commodities and equities, pretty much what we're going to be trading today. Bearish for equities and commodities when it's high, and when it's low, it's going to be bullish. Why? Because rate cuts and rate hikes are the name of the game. Strong NFP means rate hikes or a status rate. That's going to be a contraction in your money supply. Below expectations means you got to cut rates to get something going, and that's a big, big deal, especially when it comes to stocks and commodities. That's when the rallies come, is when we start talking rate cuts, and we're going to recap that after the NFP number drops. What to expect today? NFP previous, we're looking at 22,000. That's August's number. I can't stress this enough. It is August's number, 22,000. Projected, I saw 53,000 today over at investing. I'm not buying that at all. I think that there could be a contraction here. I don't know what's going to happen. Somebody does, though. Somebody knows. Somebody somewhere knows. All right, unemployment rates 4.3. We expect that to stay exactly the same. Remember, anything above 4.0 is going to be the Fed's benchmark. Anything above 4.0 is sort of getting into restrictive territory with regards to your job search here in the United States. As far as this is what it looks like when it drops, I'm going to go ahead and pull it up. We'll read the top line. We're not going to get too carried away with the top line. We're going to leave that to the media. Smart traders understand that it's the bottom line. It's the last paragraph there that's going to get us involved with any meaning towards a specific asset class or asset classes. And that's basically all there is to NFP. Don't make it harder than it is. It doesn't need to be. All right, Jeanette, good to see you, Jeanette. Welcome. Okay, let's go ahead and dive into some of these markets. We've got about 3 minutes left before this number drops. I can't stress enough how dangerous this is. Be very, very careful. This is almost an unprecedented event. Very rarely do we come off a government shutdown, as actually it's never happened. So we've missed 2 NFPs. We're looking at an NFP a month ago. These aren't even the current job numbers. I really don't even know what we're doing, but we're going to move the markets, I can tell you that. So let's go ahead and get involved here and see what we've got. So let's go back over to our Nvidia chart, and I want to pull up the Euro USD. We had a hell of a trade earlier this week. It was really a pretty good one, but things have changed. Things have changed in a big, big way. You can see here's our daily chart. We were looking at that 126.25 as being potentially an area of resistance, and now we're coming off in a big, big way. If you look at this daily, the idea is, very simple. You're in a losing streak, no question about it. What do you want to do? I would absolutely love to join the fray to the downside. It's just not really a trend. Don't get confused. This is not a trend. This is sort of a rally, and then we're coming back. You'll notice my Bollinger Bands are flat. When the Bollinger Bands are flat, it means that we're tightening up. A lot of you guys are complaining about the gold market, having trouble trading gold because gold's been flat. Very, very tight week. And when you're a day trader, tight weeks cost you money. No question about it. So for us going into this NFP release, I'm going to be looking at something like that. I would love the opportunity to sell somewhere up there right around 115.60, something like that. I think that's absolutely fantastic trade location to the short. So in order to execute a trade like that, you outline your levels ahead of time. We're going to go sell. We're going to go limit. and I'm going to drag that sucker right up there. We're going to shade it a little bit to the downside. Let's go ahead and just sell them. We'll send them from 60, 59. That'll be good enough. And let's go ahead and put that sell limit order in the queue, and we'll see exactly what happens. Okay, 29, we're just about there. Let's go to our 1-minute chart on the Nasdaq. We see a bit of a rally here. Nasdaq is going to be the US 100. This is E-mini Nasdaq futures. The reason why we're going to take these trades is because we want action and look no further than the Nasdaq. Gold, I know everybody wants to know gold. Well, here's gold. We have a sell signal potentially setting up right here. That's going to be interesting on the 1-minute chart. We're going to let this develop. Okay, there's the number. There's the big bearish move from gold. So that signal cashed in beautifully. You just had to be, fast. But nice big move there. We are seeing gold tank right down to 4,075. In my opinion, we need to wait and let this thing settle out. What do we got? 119,000. Bruce Gordon, 119,000. Nico, good to see you, Nico. That's unbelievable. That's unbelievable. If, in fact, that number's accurate, I can't even wrap my head around. We knew there was a surprise here today. That's going to mess everything up as far as your equities and your stock and your commodities. Really just a crazy number, but what does it mean? What does it really mean? Okay, we've got the number out right here. Total non-farm payroll employment edged up by 119,000 in September, but has shown little change since April, the U.S. Bureau of Labor Statistics reported today. The unemployment rate at 4.4%. Unemployment ticked higher, but your jobs numbers ticked higher. See, this is all messed up. This doesn't make any sense to me at all. Let's get right down to the bottom line here while we watch this chart. The last line, what I just told you, the change in total non-farm and payroll employment for July was revised down by 7,000 from 79 to 72, or 7,000 to 79 to 72, and the change for August was revised down by 26,000 from 22 to negative 4,000. So you're looking at a negative print for August. Unbelievable. Oof, that's ugly. With these revisions, employment in July and August combined is 33,000 lower than previously reported. Guys, these numbers don't mean a damn thing. I'm sorry. Pardon my language. They don't mean anything. 119,000 according to what? This is September's numbers. We're already 60 days down the road. So I really don't know what we're talking about here. I will tell you that's a big number, and you can see right here, this is prima facie evidence that the markets don't know what's going on. You can see that big sell-off in gold wiped out all the retail longs, and now you're right back up to your moving averages. What do we do from here? Do we want to buy it or sell it? I'm waiting for a crossover, and then I'm looking to buy this thing. I don't believe you're going to see a downtrend today. I don't believe you're going to see much of anything today. NASDAQ has popped to the top side. Let's go ahead and take a look. And there's the big move. There's the big move to the top, and there essentially is going to be your buy. So we've got the gold buy on the board. We sort of are in overbought territory right now. Let's go ahead and send this thing long, a little bit of a market order, and see what we can do. So to execute a trade like this, we don't have confirmation. We're just playing a breakout on the number. What we could do is we could be looking for something like this. Stop loss would be right down in this vicinity. Profit target needs to be at least a 1-to-1. So if you were going to build this trade, you're dragging your stop down here, which is an $8,000 risk, which is big. You could probably do it on a prop account, something like that. And then to the top side, you would be looking for something like 25.3. In my opinion, that's incredibly high risk, just because I don't believe we're going to get a move out of this. I think that the market doesn't know what's happening. So that's how you would execute this trade. For me personally, not the strongest trade in the world. We'll go ahead and see how this thing pans out. But once again, these are demo dollars. I'm not trading $8,000 of cold hard cash. However, if you're a contest trader, we've been talking a lot about trading contests this week. If you're a contest trader, if you're a prop trader where you have these kinds of funds and you have enough money to make a trade like this and potentially 5 or 6 more today, then it's not a big deal. 4 lots on the NASDAQ, that's a lot of money. No question about it. But there's also a lot of reward in these trades, and you can see right there when you come off at about $2,400 that fast, you can see how fast the money flies. Let's go back to our Euro-US dollar. Euro-US dollar, okay, we just wiped out those lows. So we're going to adjust our Fibonacci's. Incredible bounce right there. What happened at that level? That low down there was 115.02, right? 115. The bidder stepped in at 115, and we've already jammed up about 25 pips. I still like this sell, actually. I like it more than I did. 115.60. So we'll be looking at 115.55, something like that. And if we get an opportunity to sell that later today, I think that's a strong trade, really a strong trade for 25 points. Let's see. It would have dropped to 4,000 gold and made us overnight millionaires. Well, I mean, honestly, you're not wrong. 4,000 is exactly what I was thinking. on that initial reaction right here, I was thinking, okay, 4,000. That's where we're going. I'm not buying it. I think that you're going to see rotation. I think our Nasdaq trade's probably going to be a dead duck. This one right here, I don't know that I would be holding shorts or longs. I think that, honestly, today's probably going to be a good day to buy gold at a discount. So you can see what's happening on the weekly. I love my level, my 4,000 to 39.75. That's a pretty darn good support. If you get a shot down there, you almost have to take it. I just don't think we're going to get it. Now, where many of you have been running into trouble is on the daily chart trading this gold. I mean, it's absolutely miserable. Look at this week. It's been very difficult. It's tight. You've got a sort of an inverted hammer. That's a hammer. That's an inverted hammer. And now you got a doji. And when you start looking at this stuff, you go, man, what am I doing wrong? You're not doing anything wrong. The market's just not moving. And when the market doesn't move, you run into big trouble, and it happens fast. What I would recommend is probably waiting this one out. If you wanted some trades for later today, you always notice I'm talking about later and being patient, because patience is what this thing's all about. We had sort of a big talk about patience yesterday, and sort of how I was brought into the markets. You know, I had to be patient. I didn't have a choice. But I also had to trade. And in order to hit the happy medium of being a winning trader, you've got to find trades, number one. But number two, you have to be able to pass on trades that aren't that great. For me right now, very early in the morning here in Montana, but you'll see right there 4,092, somewhere right around 4,100. It's not really a bad look for a sell later today. It really isn't. My biggest challenge is right now is the market is so tight. This gold market is so tight. Can we really hang our hats on anything? Not really. We're ranging around. That number just confused everybody. It didn't help anybody. We were supposed to see a downside miss today. We saw an upside beat. That's tough. We're going to look at interest rate expectations here in just a minute as they've shifted since the NFP report. But I have to be honest with you. Do not get carried away with today's numbers. Don't get carried away with them. I don't think the markets are going to be very kind to those that don't, that do. So right here, you can see that our long really is fizzling on this NASDAQ. And the reason why is because nobody's believing these numbers. I would be surprised if the market does anything with conviction today. You're going to range around. Right now, if I was in this trade live with real money, I'd probably want to bail out. Probably looking to cut this thing off or maybe get out at break even. We'll see exactly how the next few minutes develop. But you'll see this is the market sentiment right now. It's dead. Nobody knows what to do with it. And that's okay. You don't have to know. Now, this is interesting to me. This is a trade that I'm interested in. If we get this gold crossover right here, 1 minute chart, extremely small time frame, right? But if we get this crossover right down here, we were almost in oversold territory. Were we close enough? I was right on 30. I'm going to go ahead and I'm going to take that. We're going to look to take this trade as soon as our crossover develops. Our stop loss is going to be very easy to determine. It's going to be right here. Boom. That's your stop loss. What do you got here? As soon as we get our crossover, our 9 EMA crosses over our 20, then we're going to rock and roll to the top side. Let me see, Kuna, can you tell what about the silver chart? Yeah, let's go ahead and look at silver here. I want to see this develop here for another 9 seconds, and then potentially we'll be looking to make a trade. Then we'll go to silver, I promise. Okay, we don't have a crossover yet, so let's get our silver chart set up. Silver's fantastic. It's been one of those big winners for the year. But you'll notice that you've got good movement here as opposed to what we've had in gold this week. So when I'm looking at the silver market, relatively straightforward. Weekly chart, something like that. Firm double top right up there, right around 55. Have that in your mind. Buying pullbacks. I'm bullish silver. I'm bullish metals in general. I think there's a fantastic opportunity here potentially to grab the next leg up in silver. Remember, the silver market, you're not making all-time highs like you are in gold. So it's very important that you understand that. Right there, you had some nice highs there. We've got an all-time high established. We could still break out in silver. Let's get back over to our gold chart. Okay, there's going to be our buy. We're going to buy this thing. In about 12 seconds, we'll get back to silver once we set this trade up, and then we'll let it run. Do we see any breakouts today? Well, we almost had our crossover. All right, we'll have to wait. It's going to be this bar, though. You can see we've crossed over unless we get a big reversal. So about another minute, we'll get back. In any case, silver, what I wanted to point out was this swing high right here has been taken out. So you're looking at this all-time high from last month, which is right up about 54, 50, somewhere in that zone. Interesting zone. Let's go ahead and take this right down to, say, a daily. So what's your daily doing? Real similar to what we're seeing in gold. real similar. Sort of a head and shoulders there, and inverted head and shoulders. We're not going to get into that because it's not that strong, in my opinion, not right now. This pullback went right to our moving average, and then we moved higher. So with silver, pretty much looking to buy any pullback that we can. Let's let this gold trade pan out first. I know we're jumping around quickly. I just want to set this gold up, and then we'll get back to the silver. Sort of an interesting dynamic what we have working here today. The crossovers, pretty good time to be trading crossovers, to be honest with you. The market's live, and there you go. So we're going to go ahead and send them. Let's go buy, market, send them. Okay, so we've sent them. Stop loss is going to be very simple. It's going to be beneath that swing low. The profit target's going to have to be somewhere north of this. It's got to be at least a 1-to-1. That's my style, setting these things up as a 1-to-1. That's going to be your take profit. Now, if you're a trend trader or you're a breakout trader or a momentum trader, you can easily be looking for a 1-to-2 or something like that. Really don't have a problem with it. In my opinion, on a 1-minute chart, I would be looking to scalp 1-to-1s, and you can see that it's just a choppy mess right now. So we'll see how that one pans out. We'll see how our Nasdaq pans out. I think this one's going to lose. Yeah, it's just flatlining. This right here, we're looking for some follow-through. I like this gold trade. I like it a hell of a lot more than I like that Nasdaq trade. We'll wait and see what happens, see how this develops. Okay, back over to silver. Now, the thing about silver is this. We know there's going to be demand there. The AI boom is going to bring more demand than we know what to do with as far as silver goes. There isn't as much production as there used to be. So the long-term view for silver is extremely bullish. The only question for us is, God, do we buy 51s? Well, if we're traders and we're using leverage, very difficult for us to buy 51s and hold it. It's going to be very difficult. So what we have to do is we have to say, okay, where can I get in this market and feel good about it? Well, for me, the trade's pretty much already over, and that's the story, typically. There was your pullback right to our 13-period EMA, which is my favorite. Pulled back right there to the 13, and now you rallied north. So, in my view, is it time to buy or sell silver? I think you can scalp silver right now. I don't know that I would take a position to the long. If you wanted to do something like the scalp, we'd probably work a Fibonacci like that. 62% was hit once before. I would keep a close eye on that. Probably not sell that one. Probably look to sell up there at 53, 36, 35, somewhere in that zone, and play that to the downside with a little bit of a scalp. I think that could be a pretty good way to approach this market. I think you have an opportunity to make a little bit on a short side scalp, but these are scalps. That's not a position. If I'm taking a position, very simple for me. I'm buying it. I want to buy it. So if I'm going to take a position, how can I buy it? Using the daily chart, honestly, not much there. I mean, we could buy a pullback to our EMA there. We could do that. We could also wait. We could pull up a weekly, go to a weekly chart and say, okay, what do I want to do? The Fibonacci's are not going to help you much because it's not a very good wave count. It really isn't. Spike low, spike high. Now you're pulling back. You're breaking above 38. If you wanted to buy 51s, I'd say, okay, buy them, but be careful because it really is choppy. I mean, this type of week's trade, it looks like that gold market where it's just, it's a little bit bigger than gold, but it's still very tight. We're trading inside. It's called an inside week. Unfortunately, we're going into the holiday season. You're going to see some inside weeks, and what that means is participation isn't there. The market isn't much interested in doing anything, and the reason why is the interest rates we're going to talk about here in just a second. From my perspective, long or short? Long. Long. You go long silver. Is your trade location very good? No, it's not. You're going to run into trouble, but could you fill this void potentially up towards 55? I would say, yeah, but you've got to get a rate cut towards the end of the year. And today's jobs numbers, you're not getting a rate cut. We'll talk about that in just a second. So I hope that helps you a little bit, Kuna. As far as intraday trading, if you wanted to intraday trade silver, we could definitely, I would take it right down to probably a 30-minute chart. And I mean, you can already see how important that 38%, that weekly 38 right at 51 setting up to be. I probably would be buying 51s the rest of the day and scalping them. That's not a bad zone at all. You can see there is validity there. Clearly, it's a demand zone. You're getting a pop every time you hit it. I think you're probably going to get that. I would wait a little bit, probably the next 30 minutes. If you come down and hit that, probably again and again and again until it doesn't work, and then price maybe will fall away. But I'm feeling pretty bullish towards metals today. I really am. I think that you're going to get a decent rebound, and you can see right here our crossover has done absolutely nothing. The Nasdaq's starting to creep a little bit higher. It's not as dead as it was. The big takeaway from this is that we're trading sideways inside of this NFP range, and it's very difficult. Bitcoin, let's talk Bitcoin for a minute. We had 87.5 on the charts. That was our big level. We wanted 85.2, 85.5, 87.5. Those were all discount buys yesterday. We just didn't get them. You can see the low down there. It's right around 88.497. And it's like, okay, Shane, should I just buy this because I don't want to miss out? You need to wait. I know. I mean, we're going to pass right now. Nobody makes money passing except for NFL quarterbacks. Well, we're not NFL quarterbacks, but what we can say is that 78% is a very, very strong technical support zone for Bitcoin on the weekly. I love it even more. And what that essentially represents is this year's range. April's low up to your all-time highs, right around, September, late September, up around $1.25. And then you pull back down to this area. And right now we're just sort of fiddling around. I mean, in the short term, you almost have to be bearish Bitcoin. I mean, you really do. I mean, let's pull a daily up and have a look at the daily. But daily right here, you can see exactly what happens. Our long-term level at 62% was absolutely high impact, high probability scalps to the top side, and then it broke. And once it broke, we've been pulling back, and then we've been selling up there. So the idea right now is that there's a heck of a debate going on. Are we long or short Bitcoin? To me, it's definitely a bullish market. But the way that this market structure looks, it looks like it's setting up. The longer we trade sideways around these key numbers, probably the greater chance you have a breaking down with the prevailing short-term trend, which is bearish. However, my macro trend, my long-term trend, it's extremely bullish. So in my view, you're looking for discount buys in Bitcoin. That weekly chart's a pretty good one to be referencing. The yearly range, essentially, this 85 zone, I'd be shocked if it didn't come into play. So right now, I probably would take the 87.5 bids off the board and be looking to get long somewhere down around 86, 85.50, or 85.5, somewhere in there. I think that's a pretty good bid. Do we get it? Well, that's the $7 million question about trading. Do we get it? I don't know that we get it. I don't know. It feels weird. There's a lot going on right now, and it's okay to not know. I mean, it really is. It's okay to not know. We're going to wait and see exactly how this pans out, but I love that bid down there. Now, if you're serious about Bitcoin for the long term, I know there's a lot of hodlers in there that say, hey, listen, Bitcoin's the future. And I'd say, yeah, it probably is. Excuse me, that's a monthly chart. That's not a weekly chart. So this monthly pullback is an extremely strong zone. You've got a Bollinger midpoint right there, right around that 84, 84.5-ish. So this zone down here is the one that I'm targeting. We'll wait and see if we get an opportunity maybe to bid that. As far as Ether's been interesting this week. Ether is one of those that a lot of folks are trading it right now. We're trading right at 3,000. That's compression around a key level. Remember, the key levels are everything in this market. We'll talk about those some other time. But for Ether, $3,000 Ether is a big deal. It's like $100 crude oil, $50 crude oil, $4,000 gold. It's something that everybody's going to have an opinion on. And right now at 3,000, we have seen the market just absolutely slug it out all week long. Let's go to a daily. 3,000 all week long. So the question is it support or is it resistance? In my view, it's called a point of control. That means when the price breaks down, it goes back up. When price breaks up, it goes back. And the idea is that 3,000 is the catalyst for the action, and it's absolutely true. So when I look at that chart, I say, okay, it looks like a bunch of candles and a bunch of horizontal lines. I get it. But what it tells us is, well, we're not really bullish. We're not really bearish. We know that the market really doesn't want to leave 3,000. We call that an area of fair value. Fair value. Not a fair value gap like the new SMC guys, smart money concept guys. It's an area of fair value. Interesting zone. We're going to be watching it very, very closely as we move forward. For me, I want to see the price move, get into a state of disequilibrium. That probably is going to happen down there right around 27.75. I think that's a hard bid. I think you got to bid that. So in the event we get a $25 pull off here in the silver market, or excuse me, in the Ether market, probably going to be looking to bid down there and just waiting to see exactly how this develops today. Let's go back to our Nasdaq trade. Nasdaq sort of breaking our way. Yay. Just took a little bit of patience. So now we see that, and we see the gold trade coming off a little bit. You see we almost got stopped out right there. That's okay, though. We're going to wait and see exactly how these trades pan out. For me, I would be absolutely shocked to see a directional move today, but it can happen. It really can happen. Who's believing these numbers at this point? Who's believing it? Is the Fed believing it? Now, that's what we have to talk about right now because it's important that we actually go through our interest rate expectations. Rate expectations are what this is all about. CME Group, CME FedWatch Index is the tool that I'm looking at right now. This is what derivatives traders are looking at when it comes to interest rate expectations. Very, very important that we understand exactly what that is. So we're looking at the next 20 days are sort of going to be interesting. You've got the Thanksgiving holiday next week, and we've got a situation where we're not going to have, or we're going to have a market closure next Thursday. It's going to be really choppy trading. Now, you'll notice one thing that's very important here. They don't have the Fed watch up right now. They took it down. That means that we're not able to monitor the probabilities of what that just did, what that number just did to our interest rate expectations. That's absolutely fascinating to me because typically these stay up during these events. And right now, they pulled it down. What should that tell you? As a trader, the one thing if you're going to trade, question everything, question me, question the charts, question the news, question everybody. But when we see things that don't make any sense, okay, why aren't we monitoring the interest rate expectations from the derivatives traders right now? Why is that gauge not up right now? And it goes back to the central theme of today's stream. Nobody knows what the hell's going on. They don't know. The jobs numbers, nobody believes it. I don't believe it. The markets are going sideways. All of a sudden, our Nasdaq trade's ticking up. That's nice. But the rest of it, you're just looking at it going, what the heck's going on? How do these markets digest numbers that are, 50 days old? Does the September jobs numbers even mean anything? In my view, they don't. Because we know we're going to come back over the top. We know we're going to revise down potentially next month. When are they even going to release the October numbers? Do the October numbers come next week? We don't know yet. This is a very delicate situation. It's a very delicate situation. I cannot stress that enough. So we're watching right now. Muhammad, is the NFP released? Yeah, it came in at 119,000. Let me see. We're visiting 2,500 Ether, Shane. If we get a 2,500 in the Ether, I'm more than happy to buy it. I think you're still incredibly bullish here, crypto. I really do. Back to the Ether. I know a lot of you guys trade this stuff, and that's great. Personally, I've done some crypto trading in my career. There's a couple that I really like. There's a couple that I really hate. Bottom line is they're volatile. If they have a pulse, we can trade it. Things like that. So if you're talking 2,500 Ether, I love it because it's a big round number. If we go beneath 2,750, we're going way down. We're going way down the queue. So 2,500 may be a great entry. I would let it base out a little first. But if you're going to scalp it, you could buy 2,500s. I like 2,750 a little bit better. That's for sure. Steve Francis says, is the dollar stronger or weaker because of these numbers? Well, theoretically, it's going to be stronger. Let's go to our DXY. You can see we're up a little bit this month. We're up last month. This sort of suggests the last 3 weeks or so suggests those shifting interest rate expectations, which we should be able to look at. I'm waiting for that Fed watch to come back up, and it's just they're not going to do it. In any case, you can see the rally in the dollar this month. It's not very big, about 0.5%. Still, the shifting expectations of your interest rate cuts are what's driving this market. So when we look at the DXY, here's your dollar index today. That sums up everything, Steve. It sums up everything for me. Nobody knows what to do with it. Now jobs print, we're expecting 53, right? We're expecting 53K. Comes in at 119K. That's an extremely strong reading for the U.S. dollar. That means that jobs are better than we thought by a twofold count. That suggests that if jobs are that good, economic growth should be pretty good as well. So you don't necessarily have to cut those interest rates to get the growth and to stimulate the economy. That's the idea. Now, when it comes in really low, it's the opposite. Then we got to cut. We got to kickstart the whole program. So that was an extremely high jobs number. You're going to see the administration come out and say, "See, I told you so. We got good jobs. We got a good economy." Trump will be spiking the football probably any moment. Watch Truth Social. I guarantee it's going to be a big talking point. A couple things to remember, though, about this jobs number, and I can't stress this enough. Number one, it's old. In trading and in the markets, old data doesn't really mean a whole hell of a lot, number one. Number two, and we're not going to do conspiracies. all through the Biden administration, I pretty much told you that they were doctoring the jobs numbers. It came out early this last year when they revised down the previous 6 months of data by like almost 1 million jobs, somewhere in that neighborhood. It showed that the numbers were being manipulated. There's no question about it. The same questions now have to arise for what we're dealing with. We know that the Trump administration, they fired the Bureau of Labor Statistics people. They had statistician over there. They fired him. Okay, so think about this for a minute. What's happened in the last 6 months over at the BLS? You had some firings, back in August, late July and August. Okay, they laid off a bunch of statisticians in there, and then what happened? And then we had a number, and then we rolled into the government shutdown, which took us offline for 2 months with the data. So you've got a new group of people that are keeping the stats, and we've been shut down, and we're getting delayed data. New group with delayed data. I don't know how the markets can possibly believe it. Now, I'm not crying conspiracy. I'm just telling you, when you look at the numbers and you look at this doji that's setting up on the dollar today, this tells you everything you need to know. Nobody knows what's going on. I would be surprised if we get some trends. You're seeing the Nasdaq break higher right now. That's good for us. Gold sort of breaking a little bit lower, but not a whole heck of a lot. Still digging in right around 40.75, 40.76. Be very careful on today's open. I expect reversals and all this stuff. But right now, stocks are loving it. Don't know why. Signals that there could be a not a rate cut, but maybe a rate hike. See, so right here, if we're trading this, we're up a few bucks. I'm out of this. I don't want any part of it. We were fortunate enough to get a small profit. Get out of it. They don't know. Markets don't know what they're going to do right now. Gold. What's going to happen with gold? We're pretty much stopped out there. So when you take a combination of those two trades, what happened? We lost. Why did we lose? Because nothing is happening. And when you're trading crossover strategies and nothing happens, when there's confusion and dojis start showing up on the daily, you're a dead duck. That's the biggest shortfall of crossover trading. Be sure that you check out the video over at How to Trade Calm. I give you 3 times to not trade crossovers. This was a pretty good time to take a shot and trade it, but it's going to be problematic moving forward. There you go. Bam. Stopped out. So took a $2,000 hit there, made $1,000 on the other one, walked away down $1,000. I would consider that a gift because these markets can do a number of different things today. Who knows what? Who knows what? That's for sure. All right, we got some questions over here. So to answer your question, Steve, is the dollar stronger or weaker because of these numbers? Neither. You're not going to see much of anything, in my view. We're going to have to wait. I mean, we're looking at our Fed Watch Index right now, looking for a reading. I mean, we really are flying blind. I depend on this thing daily. Okay, here we go. All right, we're back up and rolling with our Fed Watch. So, okay, probabilities for the December 10th meeting. 65% now that rates get held static. 35% of a rate cut. So basically 65-35. That's a major move. And what I stressed yesterday during the FOMC minutes is take a look at where we were, right? We were looking at this, look a month ago. It was a 98% chance. A 98% chance that of what? 98% chance that we were going to get another rate cut, and now it's 35. That's why you're seeing this shifting dynamic in the markets. That's why you're seeing the dollar sort of rally. A lot of the majors are coming off. That is the idea. There's a lot of uncertainty out there right now. I think that this is going to be the time when everybody just sort of stands pat, sits, and waits. It's one of those deals. We'll wait and see how it goes, though, guys. I expect reversals off all these moves on the open. We'll see if it works. We'll see if it happens, but definitely not trend days, not in this environment, in my view. But you're looking at the U.S. 100. You're up big. The futures markets are up big. We'll wait and see what happens. Not really much rhyme or reason for it. All right, here we go. We got some other questions here. Mark, good to see you, Mark. Did gold and silver price moves provide too much competition for Bitcoin and the alt pump, or was it just a normal ceiling cycle met or something else? Well, I mean, it's a great question, Mark. So the idea is, what are we going to buy? Are we going to buy gold, silver, or Bitcoin? Well, I mean, to me, I view Bitcoin as being different than gold and silver. A lot of people love that correlation because it really, when you look at the uptrend of the metals markets, it really has mirrored sort of the uptrend in crypto and Bitcoin. To me, Bitcoin's going to be a little bit different just because I think that the institutions, a lot of the players are the same. You could say, well, institutional adoption, Shane. I'd say, yeah, institutional adoption. Okay, whatever. But what exactly drives Bitcoin and what drives gold and silver? To me, gold and silver have been all about inflation. I think Bitcoin's benefited a little bit from inflation, but I think the market driver that's driving Bitcoin higher is the AI boom and the idea that we're going to accept technology into every facet of our life. Believe it or not, that idea translates into your currencies. So it's like, well, I'm on ChatGPT all day and it's doing all my work for me and I'm building things and doing things. Why wouldn't I just use cryptocurrencies as my mode of exchange? I see as institutional adoption as being the major driver of Bitcoin. So the question is why did it sell off? I think it's just a normal sell-off. I really do. I don't think there's anything special about it. A lot of people have been destroyed, I can tell you that, but just out to price action here real quick. You know, Bitcoin, all right, is it a little bit choppy the last 30 minutes? Yeah. Is it really reacting much, though, to the interest rate news? Not really. Let's go ahead and take a look at the monthly, though. And this is what it's all about with Bitcoin. We can get rid of those Fibonacci's. I know those can be annoying if you don't understand them. That's cool. This right here is what the game is when it comes to the monthly, right? So right down here, your compression, right? And that's back in 2023, your compression here. You finally break out. That's going to be a 1 on your Elliott wave count. That's a 1. That's a 2. That's a 3. That's a 4. That's a 5. After a 5, we sort of debate. We either restart. Well, what we've heard the word a lot is, okay, it's going to start the next cycle. We're going to move, and then we're going to compress, and then make a 1, a 2, a 3, a 4, and a 5 again, right? Remember, 1s, 3s, and 5s are movers. So your 1 moved, your 2 was a pullback, your 3 moved, your 4 was a pullback, and there's your 5. So what are we doing now? We're resetting the market. So somebody made the comment earlier yesterday on the FOMC stream, and they said, hey, listen, this is just the end of the super cycle. And I tend to agree with them on a monthly time frame. So what are we really seeing? Well, we saw a great move here, compression here, and now a break to the downside. So to answer your question, Mark, I'm thinking that Bitcoin, this is just a normal correction. That's what I would say. I don't think the price ceiling for Bitcoin is even close to being met. I'm still extremely bullish. However, I'm also not stupid. I'm in no hurry to buy this thing and hold it. Why? I mean, a lot of folks would take their Fibonacci's from here. They'd say, okay, where's the bottom of the move? Where's the top of the move? Okay, bang, 38%. Is that an accident? 87.5. Pretty good level, right? Okay. But what happens if we really wash out and get down to maybe 75, or how about even worse, 63? This thing can sell off down in here and still be bullish. So to me, I think there's a lot of room here to the downside, but I'm not interested in shorting it. I want the discount buy. I want to buy this thing at a discount. And I think that most traders are like that. So something to think about there. Let me see. Ahmed, do you expect the Nikkei to follow the movements of the Nasdaq? Nikkei is sort of its own thing, and a lot of that has to do with the Bank of Japan and how aggressively they decide they want to cut interest rates. We know that they want to get back down to a negative deposit rate. We know that. That's the BOJ's modus operandi. That is what they do. Haven't done it yet. New leadership in Japan. Got a new prime minister. See what happens right there. 44,250, somewhere down in there is a great bid. But right now, I mean, to be honest with you, Ahmed, it's all about 50. You know, we talk a lot about key levels and key numbers, but, 50, something like that. I mean, you can see that's the point of control. I'm using that term a lot lately, point of control. Think of it just as a horizontal point line, a horizontal price point. Price goes up, it comes back. Price goes down, it comes back. And that happens a lot with key numbers. We get breakouts above them. You can see this right here. Right there, boom, compression, broke above 50, tested the waters, and then came right back down to 50, saw some bids, and then it turned into resistance. So what is it right now, resistance or support? I don't know. It's a compression zone. We've got moving averages there. We got all sorts of different indicators there. What does it mean? It means that something's going to have to move the Nikkei from 50,000, and in my view, it's going to be the Bank of Japan. So, is the Nikkei going to follow the Nasdaq? No, I don't believe that. I don't believe that at all. But it's a great observation, and you're thinking in the right terms, looking for correlations. Absolutely. Let me see, Mark. I think David Copperfield was put in charge of the October jobs results, amongst other things of the administration. I'll tell you what, that was September. We saw September's numbers today. We haven't even seen October's numbers. What are they going to do? Put them out tomorrow? Put them out the next day? I don't know. I'm pretty critical of all administrations. I really am. I was very critical of the Biden administration and their numbers. I thought they were fake. I said it pretty much every NFP release. I'm starting to think the same thing about these numbers. A lot going on there, and people are getting fired, government shutdowns. I don't think anybody has a clue of the job situation in this country. Go to Main Street. It's getting tight out there. People are losing their jobs. There's a lot of that around. Where's the growth coming from? AI? Everybody's saying that AI is propping up the U.S. economy. Well, maybe, maybe not. Are housing prices coming down? No. I bet your rent, if you're here in the United States, if you're paying rent or your mortgage, if you're just now getting into the mortgage market, I guarantee you're looking at homes that are priced way up there. They're way above where they were pre-COVID, abnormally so. So what can we say about the U.S. economy right now? Nobody knows. A lot of uncertainty out there, guys. That's why the price action's sort of disjointed. All right, let's see. Davison, nice, easy NFP. Yeah, it was pretty easy. We took a winner and a loser. I don't know, pretty much two losers in my view. I mean, we could have stuck in this one and maybe made some money. Look at gold. Gold went right down and touched us and bounced. It's just it's nonsense. We're just rotating sideways. This is why the dollar index, nothing wants to move. Nothing wants to move. There you go. Let me see Universal. Good to see you, Universal. Welcome. Cheers. Absolutely, Mark. Let me see Scotty Thomas. How do you use AI for your trading? Well, there's a lot of different ways. We're sort of hyping one of the things over at Switch Markets where we use something called Algo Builder. And a membership to this thing is free when you fund your Switch Markets account. There's going to be more offers too coming out on Black Friday. Remember that over at Switch. But this Algo Builder, build automated trading strategies in plain English. And I built a video on Algo Builder not too long ago, or a webinar. And you just basically enter your trading idea. You generate your MT5 code, you back test it, and you take a look at the studies. Very simple to use. Ideas to algo instantly. That's how AI, that's how AI is used. So, Scotty, if you're asking me personally, how do I use AI? The coding for me has always been a huge obstacle. Going back to 2011 when I started, it was always a big obstacle because back then we had to hire programmers to code our ideas, and we had a lot of ideas. We just didn't really have, any coding skill. I still don't have any coding skill. I don't know how to code PineScript or any of that stuff. What AI has done is now I can code PineScript. It's pretty cool. That means any idea that I have, whether it's an opening range breakout, whether it's a crossover, a 9 EMA, whether it's, what I like to do with Fibonacci's, maybe you like ICT kill zones, different time zone trading strategies. You can code anything you want with AI. So for me, that's how it's really opened the door so I can sort of explore. I've always said that a trader's greatest asset's their creativity, and AI helps you really harness that creativity. There's no question about it. That's how I use it. Let me see, Ahmed. The Dow also looks like it's going for the 38 February sell at the daily chart. Yeah, I think that you're getting a bit of a rally. I think the rally's about over in stocks for today. We'll see. I could be wrong. Could be completely wrong. So that's definitely what I see. Yeah, absolutely, Scotty. You're welcome. All right, guys. I think I'm going to go ahead and sign off. A little bit hoarse this morning. It's early. Sort of still battling a bit of a cold. It's been hanging around for a couple of weeks now, but definitely have a deeper voice for it. As far as, what can we really say about today's NFP? We'll look at the media coverage here in just a second. Just remember, if you want to trade any of these ideas or strategies, head on over to Switch Markets. Black Friday. If you're a new client, Black Friday, they got a lot of good offers for you. You're definitely going to want to check that out. Let's check back in with our CME Fed Watch. Remember, this is fluid. This is always changing. I'm curious to see which way we're going. And now we've come back a little bit. Now we're 60-40. This volatility and these expectations illustrate, it's prima facie evidence, on the face evidence that nobody knows what's going to happen in December. Let's go ahead and we'll check the media out, what their take is here in a second. Let's see. There's a couple other ones. Let's go ahead and look at this dollar yen. Dollar yen's one of these that I've got a lot of requests to break down over the last couple of days, and rightfully so. Dollar yen, you can see right here. What do you got? Bullish, completely bullish. Now things are changing a little bit with the NFP number. I wouldn't really worry too much about it. As far as what would I love to do? I would love to buy pullbacks all day long right now. Just are we going to get one? 156 and a quarter is a pretty good one, but you have to get a top in first. and we just haven't seen any evidence that we're going to get a top in this market for days and days and days. Here's a 4-hour chart. I love the 4-hour chart on Forex pairs. I think it's fantastic. Fantastic way to trade. Something like this. Spike low, spike high. There's your pullback. What do you got? Yeah, sort of a P formation, still very bullish. If we come off of this level from the current zone, maybe get down there about 100 pips or 80 pips south, I mean, it's definitely a buy in my book. We just got to wait and see if we can get a pullback. Are we going to get one? I don't think so. Maybe. We may get one, but I doubt it. As far as what are we looking at in the long term, we sort of highlighted exactly the key levels that you need to be aware of. You need to understand that we're coming up on that yearly high, right there, January 2025, January 6th. There you go. There's your high, somewhere right around 158.89. Probably bullish until then, and then more than likely, you're going to get a bit of resistance at that zone just because it's a key level. You know, it's a yearly high. And as we roll into December, towards the end of the year, you know, you really need to be aware that, okay, we're getting into this range. Call it an order block, call it a liquidity sweep, whatever. We're going to get up there and probably trade it. So I'm bullish until we get up to right around 158.89 in the dollar yen. I think that's pretty good. Pretty good area. All right, let's take one more check on what the mainstream media is saying about this. Delayed September report shows U.S. added 119 jobs, more than expected. Unemployment rate's at 4.4. See, the unemployment rate ticking higher is a big deal. Let's go ahead and give that a click, see what they've got. Non-farm payrolls increased 119. The unemployment rate edged higher, the highest it's been since October of 2021. Interesting. Average hourly earnings are up. The report ends a data drought in the labor market. So, I mean, is it a positive or a negative report? Unemployment's at 4.4. That's not good. NFP's up 119,000 jobs. August number was negative. You know, the question the economists will ask is the worst over? Is it over? If it's over, then we go into a growth cycle, right? Remember, these numbers are delayed. I'm not believing any of this just yet. We'll wait and see what happens. Right now, the dollar's starting to rally a little bit. I'll be watching this closely. All right, everybody, I'm going to go ahead and sign off. We've been on long enough. About 19 minutes from now, you're going to get the U.S. Open. The U.S. Open is going to be a big deal in an environment like this because as of right now, there's plenty of volume in the market. However, since that release, a lot of the algos aren't trading anymore. A lot of the folks took their money off. They want to see what the big boys do on the cash open. Be ready. Be ready for anything. I'm thinking reversals. I say that almost every time because it's true a majority of the time. But today, right now, the Nasdaq's up about 2%. Can it hold those gains? I don't see how. But maybe I'm wrong. We'll wait and see. All right, everybody, thanks for joining me. We'll be back tomorrow with a Friday strategy session. We're going to do a Fibonacci market scan, which is pretty standard. Bring any and all questions that you have to tomorrow. Whatever you want to ask me, I'm more than happy to answer everybody's questions. If you have any markets you'd like to look at, be sure to pass them along. Later today, we will have an actionable trade idea out. I'm scoping a few. I think that dollar yen, I would love a pullback. I just don't know that we're going to get it. We're probably going to be looking to sell the market right up around that yearly high, and we'll be in good shape doing that. We just got to be sure that we get our entries. That's always the case, isn't it? We got to get our entries. If we don't get our entries, we're in big trouble. All right, everybody, thanks for joining me. Absolutely, Grant. Cheers. Tina, good to see you. Lots of germs in the gym. You may get it there. Get well soon. No, I feel pretty good, Tina. I'm just a little hoarse. But yeah, we're not going to shut the working out down. We gotta go strong into the holidays because the calories always go up in the holidays, right? So it's good to see everybody back in the room. Have a fantastic day. Remember, if you want to reach me with a private message, head on over to howtotrade.com. Click on my picture, send me a message, just say hi or send me a question, whatever you'd like. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.